On the short-term outlook for the local market?
The short-term outlook has been mainly driven by earnings, and it's been quite good so far, so I wouldn't be surprised to see a pullback either. But the longer-term outlook is looking good. We haven't seen a positive earnings cycle coming through for the last 3 years. So this earnings cycle and this earnings reporting season is really a turning point in the cycle. So we are expecting to see this being a multi-year trend. If we have a look at the Australian share market and just have a look at a longer-term chart, this is a 10-year chart of the Australian share market. You can see that we've still got quite far to go before we reach the peak that we saw back in 2007. But of course, Australia has strong dividends as well. And we've been talking about it from an accumulation index point of view as well, which includes dividends being reinvested. And if we have a look at this graph from an accumulation index point of view, you can see that once we include the dividends, we have surpassed that level that we saw back in 2007. Today, one of the key things we were watching was China. Now, the Shanghai Composite did manage to gain. It still hasn't closed, but it's up 0.1% at the moment, and that's helped the Australian market a little bit to stabilise after losses of 2%, 1.8% and 1.2% in Shanghai over the last 3 sessions. The material sector, though, still under pressure, down by 1.2% today, and that's because the iron ore price does continue to fall. It's trading below 120 US a tonne at the moment, but the fact that we saw some strength in those big 4 banks as well as the energy sector meant that we saw a gain for the Aussie share market. So just a bit of stabilisation for the Aussie market today. We saw this with QBE, where they came out with a downgrade, and then when they came out with their results, we saw no new bad news coming through. And we've seen the same thing with Worley Parsons. They came out with a downgrade last December, saying that they expect the full year profit to be between $260 to $300 million. Now, at the time, they did give a guidance of the half year of between $90 to $110 million, which meant that the second half would have to be much stronger, and there was a large risk that we would see a downgrade to the full year forecast as well. We didn't see that today. In fact, there were signs that we are seeing the hydrocarbon market actually improving. And if we have a look at Worley Parsons, it's really a leverage play on the hydrocarbon area. We saw revenues flat in this area, although earnings before interest and tax was slightly lower, and they did manage to come in on the upper end of guidance. So they were expecting $90 to $110 million, coming in just above that midpoint at $100.7 million. It does mean the second half they're going to have to do a lot of hard work. It means the second half of the year compared to the first half of the year, they're going to have to see an increase in terms of profit of between 60 to 100%. So virtually having to double profit to meet the top end of those forecasts that they gave back in December. But a fantastic share price performance, the stock up more than 10%.
Julia, tough day to be a property stock today. Obviously, very much headlined by Westfield. In the end, it was down about 2.7%.
A bit of profit taking on Westfield, and I think you have to look at Westfield's share price performance in context of the lead up to this earnings result, and it actually has been a fantastic performer throughout the last 1 month. In fact, looking at the last 1 month, the shares had been up 7%. Now, there were no surprises in this particular result. We have a look at the result really coming in line with expectations, and I guess one of the things that we're watching with Westfield is the development pipeline, because this is one of the things that really adds to the variability in profitability for Westfield, but we saw no huge new developments there. So really coming in line with expectations. The stock being sold off, though, I think it was down by 2.7%, but looking at it in the context of the share price movements over the past month, we have seen the shares up 7%.